Something big is happening behind the scenes of global finance, and few understand it. While the media keeps your attention on Bitcoin, Wall Street is quietly positioning itself around XRP. What if the world's most powerful institutions already know where the future of money is headed, and are deliberately misleading the public until they've secured their positions? Today, on EconGeoFinance Insights, we reveal what Wall Street doesn't want you to know about XRP, and how it ties into the coming reset of the global financial system. For decades, Wall Street has mastered one strategy: strategic misdirection. When institutions tell the public to run for the hills, prices are usually at their lowest, and when they hype an asset, it's often time for them to exit. The same game is being played in crypto. While mainstream analysts dismiss blockchain as a passing trend, the largest investment firms, BlackRock, Vanguard, and JPMorgan, have quietly been investing, researching, and partnering with blockchain networks for years. Publicly, they downplay crypto. Privately, they accumulate. XRP is a perfect example. Behind the noise, it's being built into the infrastructure of the next financial order. XRP isn't just another cryptocurrency, it's a liquidity bridge, a tool designed to move value instantly between currencies, banks, and borders. It connects the old world of finance to the new world of tokenized assets. Think about it. Global institutions like SWIFT, the BIS, and the IMF have all been exploring blockchain solutions for cross-border payments. Many of the people developing those systems have direct ties to Ripple, the company behind XRP. And that's no coincidence. For years, insiders have moved from the legacy banking system to Ripple's ecosystem, quietly integrating this technology into the global settlement architecture. But the narrative you hear in the media: XRP lost its case, XRP isn't decentralized, XRP is too risky. That's not ignorance, that's strategy. The goal: keep the retail investor out until the infrastructure is ready and institutional capital can flow in safely. Every market moves in cycles: expansion, euphoria, collapse, accumulation, and expansion again. Wall Street has turned that pattern into profit. When fear dominates, they buy. When hype dominates, they sell. And in crypto, it's even easier. Without full regulation, manipulation thrives. Media narratives are used to create volatility, and volatility creates opportunity. Each crash shakes out the weak hands, leaving only institutions with deeper pockets and longer timelines. XRP's suppressed price isn't a failure. It's part of that game, the quiet stacking phase before full adoption. Regulated capital is about to change everything. The next crypto bull run won't just be retail speculation, it'll be led by banks, hedge funds, and corporations integrating tokenized assets into their balance sheets. XRP's on-demand liquidity system is tailor-made for this. It provides real-time settlement for any currency or asset. As stablecoins, tokenized bonds, and gold-backed digital assets expand, they'll need a neutral bridge. XRP fits that role perfectly. This is why the world's central banks, through organizations like the Bank of International Settlements, are experimenting with Ripple's network, even as they publicly stay silent. The irony: the same institutions that once tried to kill crypto are now rebuilding their financial systems on its backbone. Global debt has exploded. Governments are drowning in liabilities. To keep the system afloat, they need liquidity, and fast. Stablecoins and tokenized debt markets offer that lifeline. The new stablecoins being approved under the Genius Act in the US require issuers to buy government debt as collateral, a quiet way to create artificial demand for US treasuries. XRP, meanwhile, sits in the middle as the bridge for these digital instruments. When the next credit event hits, and it will, blockchain settlement rails like XRP Ledger could become the global emergency infrastructure to move liquidity instantly across borders. Gold, tokenization, digital IDs, stablecoins, they're all converging into one unified system. The ultimate goal? A programmable economy where every transaction can be traced, cleared, and settled in seconds. XRP, with its speed and efficiency, could become the invisible backbone of that system. Wall Street knows this. They've known for years. That's why the public narrative lags so far behind the private adoption curve. The question isn't if XRP will play a major role, it's when the rest of the world will realize it. If this breakdown opened your eyes, subscribe to EconGeoFinance Insights, where we expose the truth behind crypto, economics, and geopolitics. The game is changing, and knowledge is your greatest asset. Stay curious, stay informed, and remember, when Wall Street tells you to look away, that's usually when you should start paying attention. If you enjoyed this video, please like and subscribe to Express EconGeoFinance Insights, and let us know your thoughts in the comments below.